Our next speaker is Simon Hay, Managing Director of Lithium. Simon joined Lithium as Managing Director and CEO in January 2022. Prior to joining Lithium, Mr. Hay was Chief Executive Officer of ASX-listed lithium company Galaxy Resources. The culmination of his role as CEO was the $5 billion merger of equals with Orocobre to create the world's fifth largest lithium producer, Allkem, in mid-2021. Mr. Hay has an astute knowledge of the lithium market and is well regarded in the capital markets for having created value at Galaxy. Mr. Hay is also non-executive chairman of Battery Future Acquisition Corp, a special purpose corporation which was listed on the New York Stock Exchange in December 2021. Mr. Hay holds a Bachelor of Science with honours in chemistry and a Master of Applied Science Metallurgy from the University of Melbourne. Please welcome Simon Hay.
Great. Thanks, Liam, and welcome everyone, especially the African ministers, ambassadors and delegations. Thanks to Dom and also Bill at PayDirt for the opportunity today to present to you. Today I'll describe the Goulamina Lithium project in Mali, which will be West Africa's first lithium mine to enter construction and then production in the next few years. I'll outline the brief history of Lithium, the company, and I'll put Goulamina in a global perspective, comparing us to the other lithium projects around the globe. We'll also outline the benefits of our JV partner GANFENG and what they bring to the project. I'll give you an update on progress in terms of drilling, construction and site activities, but also our schedule and also the very long logistics chain that we have to deal with. Give you some brief facts there. And finally, I'll finish on our relationship with the Malian government. So firstly, a bit of background. Half the world's lithium, or more than half the world's lithium for lithium-ion batteries to power the electric vehicle industry globally comes from hard rock spodumene mines, and most of that is here in Western Australia. Spodumene prices are at record levels of $5,000 to $6,000 per tonne. When I was working at Galaxy, we were selling spodumene for $350 a tonne only 2 or 3 years ago. So that rise is really remarkable and really goes to show the explosive growth that's occurring in electric vehicles and the lag of the minerals that need to power those electric vehicles, the lag of those minerals in coming into production and development before that. These spodumene prices are leading to very healthy economics for lithium miners, and the Goulamina Lithium project will be no different. You can see our NPV of $2.9 billion US here on the screen, and what's really important to note is that was calculated at a spodumene price of only $1,250 a tonne for the first 5 years and $900 per tonne life of mine thereafter. So you put spot prices into your financial models and you'll see that NPV will grow extremely strongly. We have a very large-scale, high-grade ore body and we have a world-class partner. I'll talk more about both those subjects shortly. A little bit about the corporate profile of Lithium to begin with. Unlike the previous speakers, Carl and Owen, who have very mature, excellent companies, been in operation for many years, Lithium's at the other end of the maturity curve. We're only 2 months old. We completed a demerger from Firefinch, our former parent, and an IPO in only June this year. So we're only a couple of months old. We are very well funded, however. We have $130 million US in our JV account. We have a debt facility of $40 million, and we also raised 100 million Australian dollars in the IPO. So we're very well funded as we enter this stage of development of the Goulamina Lithium project. Everyone loves a good bubble chart, especially when you're in the top right quadrant, which the Goulamina Lithium project is. And you can see this chart really shows the lithium hard rock industry in a snapshot. And you can see the major bubbles in the top right quadrant First of all, the producers are in the dark bubbles, and you can see there's only a handful of them. There's 3 in Western Australia, and there's a few others to the left-hand side of the chart. You can see the developers in the teal colour, I think it is, and Goulamina, you can see pointed out there, circled in yellow. We have 100 million tonnes of resource. We have an excellent grade of 1.5%. These 8 projects, well, so 2 of those projects in that top quadrant have ill-defined development curves, Monono and also Jadar. So I think the 3 developers and the 3 existing operators have excellent assets, and these companies are going to deliver significant volumes of spodumene into the market. And Owen talked about the benefits of grade and scale. Grade, you can certainly helps you with your economies, your recoveries, your cost profile, but grade gives you scale. And those projects in the top right quadrant are all going to produce over 500,000 and up to 1 million tonnes per annum of spodumene. Whereas you look at the smaller producers and the smaller deposits, they're producing around 100 to 200,000 tonnes per annum of spodumene. So Goulamina in a great position, a world-class asset, and we intend to build a world-class project in Mali. A little bit about our partner, GANFENG. GANFENG is China's largest lithium chemicals producer. They have provided the $130 million US equity in our JV account and have also provided the debt facility, but they bring a lot more to the table than just funding. They're assisting us right at the moment in procurement. They helped us acquire a ball mill or procure a ball mill from a vendor. It's currently being constructed, but that timetable to get that ball mill out of China was less than a year and at a very good price. So they're really helping us accelerate the project. A number of other packages are also being sourced from GANFENG's supplier network in China. They have built a number of spodumene conversion facilities in China, and they'll be building, I think it's their 6th, to take the Goulamina product and convert that into lithium chemicals in China. And that's really important. The lithium industry is an emerging industry. It's growing very strongly off a very low base. And you can see there's some lithium converters being built in Australia at much higher prices than much higher costs than what GANFENG delivers them for, and also longer development timeframes. So having a customer and a JV partner, which is well experienced in lithium chemicals, I think is a real advantage for Leo Lithium. We have a drilling program underway this year, and it'll go into next year at site at Goulamina. And this chart shows you a little bit of the ore body. You can see in the dark red, we have the pegmatite seams. We have about 5 of them that trend in a northwesterly, southeasterly direction across the tenement. And to the right of those seams, we intend to place our waste rock facility. So this year we had to drill that area so that we know we wouldn't destroy any of the resource. And we struck pegmatites in a number of places. So a really nice problem to have, that we're getting pegmatite where we didn't want it. We've got some great strikes there of 20 metres at 1.8% lithium. If a junior company in Australia had one of those strikes in Western Australia, you could float that company probably on $50 million just on one drill hole like that. So we have these in our waste rock area. So this year and next year, we'll look to drill out those extra, those recent hits to see if we need to sterilise that waste rock area and move waste rock into another region. While we're on this chart, you can see the bottom of the chart is called the denier domain, and the top area with the 5 seams is the main pit, and I'll talk about these on this next slide. So the denier domain, we are conducting about a 10,000 metre drill program. It's nearly completed. we intend to expand the resource. The resource is open at depth and along strike. The drilling program that was completed in 2018 went to 150 metres in depth, and then we just stopped because of financial reasons. A lot of those drill holes finished in mineral, and many of those, the grades at the bottom of those drill holes was around about 2% lithium. So some of the drilling program we're doing this year, particularly on the northern pit, we'll be sending in deeper drill holes just to see how far the mineralisation does penetrate into the ground. But the Denier resource, we intend to restate this resource towards the end of the year when we complete the assaying and update the model. And we expect to upgrade the resource and potentially extend the resource as well, because we are hitting pegmatites well outside the current pit design. On the northeastern side, the northeastern domain, we will continue to drill deeper and also upgrade the resource quality, because that's where we'll start mining in the first place. So we expect to announce some better results towards the end of this year and into next year. We don't really need the results. We already have 100 million tonne of resource and a 20-year mine life. Moving on now to the process, and we've deliberately selected a very simple flow sheet. It's flotation only. You can also have a DMS site, a dense media separation part to your flow sheet, but we have found the mineralisation and the test work shows that we only need a float circuit, and that really helps us simplify the flow sheet for the processing area. And this helps us keep the capital costs down and should also make it a fair bit easier when we get to processing down the track. We're building the project in 2 stages. The first stage, you can see here, it's a little bit hard to see on the chart, but we're building the flow sheet, the process plant. To the front end should be able to take 4 million tonnes of ore throughput, and from the ball mill it'll only be 2.3 million tonne thereafter. So in a couple of years' time, after we've brought stage 1 into production, we will expand the project, and I'll talk a little bit about the metrics later on. So what's happening on the ground? First of all, here in Perth, design work is 20% complete, drafting's around 12.5% complete. We're very pleased to have Lycopodium as our EPCM. Lycos have got a booth here today. They're very well experienced in West Africa. They've been building projects in Africa for over 20 years. I think they've got 8 current active projects in Africa. So really, we're really glad to have a very experienced team in delivering projects in Africa on time and on budget. Great to have them as our EPCM partner here in this project. Touched on procurement already. We have a number of packages out to tender. Probably about 40 to 50% of our capital expenditure is currently out to tender. The project at the moment is on cost budget and on schedule. Not many projects can talk about that at this stage of that very high inflationary environment that Liam mentioned right at the start. We are still exposed. We have most of our capital spend to occur in 2023, so we're not complacent. We really need to manage our capital costs as we go through this project. However, going back to the start, the project is relatively insensitive to capital with the excellent prices that we're receiving. The financials, a moderate uptick in capital cost would not impact the project in any meaningful way. The teams, the design team, the operational team, the construction team are looking to mobilise towards the next quarter, so there's a bit of planning that's underway. Our project director, Tom Blackwell, was in country only last month doing an early reconnaissance trip as we get ready to mobilise those teams. We do have some site works underway already. Pioneer Camp, access roads, a few other items are already in progress. So the project is well and truly underway. And you can see that here on these photographs. You can see our pioneer camp. The top left photo shows a little bit about the terrain. It's a flat terrain. There's a very sparse population in the region. It's subsistence level farming. So we're really proud to be able to bring some economic activity to the region, jobs. We'll create secondary businesses that will flow around the Goulamina project. And the government is very supportive of our efforts in that area. Also some other photos there just on the drill rig. The drilling at site, it's the middle of the wet season or coming to the tail end of the wet season. We have been able to get through pretty well unscathed, and it hasn't slowed our activities too much at all this year. I talked earlier about splitting the project in 2 stages. Stage 1 is 2.3 million tonnes of ore throughput, and that will grow to 4 million tonnes of throughput in stage 2 when we install a second ball mill. If you look at the capital costs, they only grow from 255 million for stage 1, a very moderate 70 million for stage 2. And that's because there is a fair bit of infrastructure being built and installed in stage 1, which will be utilised in stage 2. And our production capacity will grow from 500,000 tonne per annum of spodumene to 800,000 tonnes per annum of spodumene. At that level, 800,000 tonnes, we would be the number 2 producer in the world presently. In a few years' time, there's a number of projects that are going through expansions, so we won't be number 2 when we bring stage 2 online, but we'll still be in the top 5. So it will remain a globally significant supplier to the world's lithium-ion battery industry. Got some detail here on our project schedule. It's the key points to look at. We expect to complete construction early 2024, commissioning around the middle of 2024, and we'd be expecting around about a 6-month ramp up, so we'd be at nameplate capacity by the end of 2024 and full production in 2025. We've got an outline there of what stage 2 looks like. As you can tell from the capital cost, it won't be anywhere near as difficult or as long to build that project. So we expect at this very early stage, it's roughly a year to build it. The study phase won't be very long. It's not really a study, it's more we'd go straight into an engineering phase. And again, we'd expect commissioning to be shorter because it would be the second line that we would be commissioning. Yet to be fully detailed, that's why it's in a dashed sort of display there, but it's certainly in our plans, it's in our JV partners' plans that we do move into stage 2 as quickly as we can. Mali's a landlocked country. Goulamina is 1,000 kilometres from the nearest port, so logistics is a very important part of this project. We had a team over in Côte d'Ivoire only a few weeks ago, meeting with transportation vendors, shipping companies, warehousing companies. We've got an outline here of what the road transportation route looks like through to Abidjan, but we're also looking at a secondary port in Côte d'Ivoire, San Pedro, as an alternative export port, and we'll also look at Dakar in Senegal as an export port. Dakar has, for those that don't know, has a very mature and well-established bulk commodities export facility, so it's another option that we're certainly looking at. Because we'll have a lot of material to move, I think we'll need more than one discharge port, so we'll probably spread our risk here and have a couple of transport routes and discharge ports. Mali's been a mature mining industry for quite a while. It's had a very well-established gold industry for over 2 decades, and it's Africa's 3rd largest gold producer. We're getting a lot of support from the Malian government. There's a delegation here this week. The Malian Minister for Mines, Energy and Water, Minister Traoré, arrives tonight, and we'll be having a number of meetings with the Minister over the next few days. The Minister has been very supportive of the project. Malian government is very proud to have a major deposit that they will see it feature in the electric vehicle boom that's occurring over the next 2 decades. As I said, they're very pleased for us to be bringing economic activity to a region that has very little of that activity, very little employment. The Malian minister, as well as the Prime Minister, signed off on the transfer of tenure from our predecessor company, Firefinch, to Leo Lithium, and they've been very supportive as we develop the company and start on the construction phase. So really pleased to see to have the Minister here in Perth and his delegation. And in conclusion, I'll just leave you with 3 takeaways on the Goulamina Lithium project. First of all, we'll have fantastic financial returns from a very moderate capital cost outlay. It's a large-scale, high-grade ore body with potential for further increases, and Leo Lithium is in a fantastically robust position financially, and the project is tracking to plan. We're on budget and on schedule. Thank you very much.